Last Friday, members of the media and financial analysts alike converged upon first place in the early hours of the day to witness the highly anticipated presentation of the FNB half-year financial results. Expectations were high as the decision makers of the bank, including the chairperson, board members and executive committee, geared up to relay how the bank had navigated the choppy waters of 2013, how they had fared profits-wise, as well as what dividends their shareholders could expect. How understanding would the bank's stakeholders be about the executive decisions taken to mitigate the pressures resulting from a fragile economy? Would the bank manage to retain consumer confidence in a time where competition is growing and expenditure is limited? The team seemed confident to take on the task and deliver the news. The Deputy Chief Executive Officer, Richard Wright, got things underway by giving an overview of the business environment that the bank was operating in during the last half of 2013, factoring in inflation, interest rates, as well as credit.
The real GDP growth for the period ended 31st of December 2013 is expected to grow at 5.4%, up from 4.2% in the prior year. The turnaround is attributable to an 11% increase in mining, predominantly diamond mining. The non-mining private sector continued to grow at 4.6%. The main contributors towards the non-mining private sector were services and, to a smaller degree, manufacturing. Inflation is on a downward trend. Year-on-year inflation has declined from 7.4% to 4.1%. We have seen that in January this has ticked up slightly to 4.4%. However, our expectation is that we will continue to remain within the Bank of Botswana's target range of between 3 and 6% in the short term. On the back of this decline in inflation rate, we have seen a 2% decline in interest rates over the last 12 months, to the lowest level we've seen in 23 years. Of this 2% decline in interest rates, 0.5% of it related to our prior financial year and 1.5% in our current financial year. In terms of credit growth, whilst still very high, we have seen credit growth decline from 21.4% in June 2013 to 18.2% in September 2013. The major contributor to a credit growth remains households who have grown at 26.7%, whilst firms have only grown at 7.3%. Interestingly, the growth in credit to households is largely driven by property loans.
On household debt, Richard says they are witnessing a demand for credit that continues to grow exponentially, while savings remain flat. And that of major concern to the bank is that 66% of this debt is unsecured lending, made up mostly of credit cards and unsecured term loans. In the bank's response to the challenging 2013 environment, a strategy was formulated to balance its credit risk appetite, focus on collections, and diversify its portfolio to continue to make gains.
Now, First National Bank's response to this economic environment has been, in terms of our credit risk appetite, we set ourselves a threshold of operating in a 65-35% secured versus unsecured ratio. What this in practical terms means that for every unsecured lending we write, we need to write more secured lendings. And the term secured lendings means we need to have security in the form of, for example, property, cash, bonds, etc. In addition to that, we centralized our debt recovery department. We did this in August 2012, so over a 9-month period. And what we've seen is that our collections have improved on average of 10 million pula a month to approximately 45 million pula. So we're very happy with this particular strategy and it's paid off well. The third strategy that the bank has had is to have a well-diversified portfolio. We've continued to achieve this particular strategy, notwithstanding the fact that our book has grown exponentially. What we've seen in terms of our portfolio, we have three asset classes, or major asset classes. The first is property, the second is West Bank, and the third is term loans. Now, the term loans cut across the four segments that we have, and this is there's a percentage of secured and unsecured business written in that particular portfolio.
This diversified portfolio is written across four segments. In order of size, they are consumer at 41%, commercial 33%, corporate 21%, and public sector at 5%. In the face of all these challenges, FNB expressed confidence that their appetite for innovation is one aspect that will sustain their growth.
You may recall that in November, we introduced Rand Merchant Bank to the market. Rand Merchant Bank is a division of First National Bank, and we are particularly excited about introducing RMB into our business, as it gives us the ability to leverage off the investment banking products. RMB has various products or areas that it focuses in global markets, which is forex, trade, custodian, corporate investment banking, advisory services. So effectively, RMB has given FNB the ability to play in various markets. Our fifth strategy is to continue to be the most innovative bank in Botswana. In July 2013, in a joint venture with Botswana Post, we introduced prepaid electricity. We are exceptionally pleased about this particular product offering, and we are currently doing about 50,000 transactions a month. The current attractions, I'm sure that for those of you that travel a lot, you've seen that FNB has introduced the Rand ATMs. We've installed 3 ATMs over the last 2 months. We have one downstairs, we have one at the border post, Klokveng, and we have one at the airport. And they are really very attractive ATMs, so I'm sure, and I certainly hope that you use them. In fact, you better. In addition to that, we've employed 24 slimline ATMs. You may recall we have spoken about these before. In the last 2 to 3 months, as I said, we've introduced 24 of them. They work very similar to the standard ATM, with the exception that they do not dispense cash. The machine dispenses a receipt that you would take to the till of a retailer who will dispense the cash. And we anticipate we'll be rolling out a lot more of these in the near future. And then finally, in terms of cell phone banking, we've included the product offerings in terms of cell phone banking. We've introduced pay to sell. Effectively, the pay to sell is that we link your cell phone to your current account, and using just your cell phone number, we can pay money directly into your account. And then once-off payments, which is, it talks for itself, it's a once-off payment.
When we return, the bank's Chief Financial Officer, Boitumelo Mogopa, crunches the numbers and details the bank's overall performance. Welcome back to First Issues as we continue to explore the details of the FNB half-year financial results. Before launching into the financial analysis of FNB's performance, Boitumelo Mogopa painted a picture in which there was a slowdown in economic activity in the country. Consumers are said to still be under pressure, with still no increment for civil servants. Botswana are said to be struggling to save and borrowing more.
It has been a tough environment, ladies and gentlemen, in the sense that before we go into the numbers, it is, I think, prudent for us to reflect on it and to recap on it. This environment was characterized by a slowdown in economic activity in the country, Because of the sluggish economic activity, it then meant that there was very little job creation in the market. That meant that the unemployment levels were exacerbated by the same, whereby we are sitting at about 20% in terms of unemployment levels in the country. We are in a low interest rate environment, ladies and gentlemen. Richard spoke about the rate cut that we saw in the last year of 200 basis points year to date to December 2013. The consumer is still under pressure in the sense that 27% credit growth under consumer is still quite high. And Richard did say that this comes from the unsecured loans. Consumers are struggling to save, as you'll see later on in the slides that we have. And also, Richard has already covered the fact that the net debt burden is widening for the consumer. It is against this backdrop, ladies and gentlemen, that as a bank, we had to continuously refine our strategies. We were in and out of this boardroom regularly to refine our strategies to say, how do we respond to this environment? We decided, and we were deliberate, we said that we're going to grow in certain segments and certain products. We kept to that. We focused on ongoing quality of the book. We focused on a diversified asset book by product and by segment. We focused on innovation. Innovation continues to define FNB Botswana. We spoke about FNB, we spoke about launch of products. It is still part of our DNA. In terms of the highlights, profit before tax is up by 5%. Non-interest income is up by 4%. Cost-to-income ratio at 39.9%. Advances growth, 18% growth. And dividend per share at 5 thebe. Return on equity at 39%.
We caught up with the CFO after the results announcement for her to unpack these facts and figures and give us a better understanding. What was your main strategy in response to this environment, what you described as a difficult environment?
Yeah. What we do at FNB is that before the beginning of every year, we sit around the table and say, now that the environment looks like this, what are we going to do? So what we said was, clearly this is an low interest rate environment. How do we counteract that? We said clearly we want to continue growing our advances book, but grow it in areas that are safe. So we see property as a safe asset class. We see West Bank as a safe asset class. We see schemes as safe asset classes, as well as all secured loans that we have under term loans. So we said that we're going to do that. What that meant is that even though it will come at interest rate margins, at least we will look after the quality of the book into the future. So it was a forward-looking strategy, if you like. We'll have to take pressure on margins in the short term, but we are okay with that because it will give us returns in the future because the quality of the book will be great. So that was our strategy. We then said that with RMB launch that we did in November, we should be able to have ability to play in investment banking space. So RMB was launched in November, if you remember, and it's enabled us to move away from vanilla type products. So going forward, what we'll be seeing is that we'll be able to structure more complex deals because of the fact that RMB has been launched in Botswana. We need to continue to be innovative because, as I said, with interest rates that are going down, said how else are we going to grow as a bank? So we believe that we needed to continue to be innovative. Fortunately, innovation is part of our DNA. It comes naturally for us. So we said that we have to continue launching new products because this tariff freeze that I'm talking about is outside the new products. So as and when we launch new products and offerings, we'll have to go to Bank of Botswana to apply. So they'll look at those. We said that we also have to drive transactions because especially the electronic transactions, we still believe there's an opportunity there to ensure that our customers are using our electronic channels. As an example, we still believe that as BPC rolls out the prepaid electricity, we still have an opportunity to tell the consumer that, by the way, you can buy power just using your phone. That helps us with our e-solutions.
What are the main factors? You did report that there has been a decrease, especially in point-of-sale transactions. What are the factors affecting that number there?
Generally, the transactions coming out of at the market have reduced. And I think if you consider the fact that the consumer is still under a lot of pressure, and that means that the same consumer who used to be able to transact 5 times or 6 times in a month, now they are transacting about 2 to 3 times. That affects the bank because it means then that what used to happen in terms of transactional volumes is not coming through. That's the first thing in terms of service fees, an example. If you look at point-of-sale machines, competition has actually toughened up. In the last year or two, we've seen other banks getting into this space aggressively.
Can you unpack for us the rise in cost-to-income ratio and what this means and what you expect going forward?
Look, the cost-income ratio for FNB has always been under 40%, and if you look at the market of Botswana, that's a very low cost-income ratio. Other banks are in the 50s, other banks are in the 60s, and we have been under 40% for a very long time. The effect of the matter is that the cost-income ratio is a function of 2 things, the rate at which you grow your income and the rate at which you grow your costs. We would like to ensure that we grow our income at a faster rate than we grow our costs. But this doesn't mean that we don't want to spend as a bank. Investment is still very key for us. Investing in our people, investing in systems. I've just spoken to you right now about how we'd like to upgrade our machines, upgrade our ATMs and all our channels, and refurbishing our branches as an example. So that is going to be a continuous thing that we look at. So what this means is that if revenue is under pressure, which is something that we are focusing into the future, we will have to manage costs so that we can keep a sustainable cost-to-income ratio.
One of the bank's long-standing strategic aims has been to have their non-interest revenue cover their costs. How have they fared thus far?
A ratio that we watch very closely. I think it's one of the ratios that only FNB has been able to achieve in the market. It's a fantastic space to be at, because what this means is that even when interest rates are fluctuating, we are still cushioned because we have this revenue generator that is sustainable. Now, into the future, with the moratorium in terms of bank charges, this line will come under pressure. So you would have seen in my slides earlier on that the gap between how we manage costs has actually narrowed over time. So it will be under pressure, but definitely, because we are very innovative, we'll continue to try and drive our non-interest revenue and keep our costs down.
Impairments are down by 13%. How does this compare with the target you had set for yourself as a bank?
We believe that a 13% year-on-year is a very good result, and that's because also we were very resolute in how we approach. We are very resolute in how we approach credit. We basically say, if a customer walks into a branch and they want a loan, let us score them at source and look at all their behavior and give them the loan that they actually qualify for. There's no judgment in there. It's a system saying, you have applied for 50,000 pula, I can only give you 20,000 pula, Mr. Customer. That's the first thing. The second thing is we continuously doing what we call ongoing risk management. There's a team of people that every day they wake up to look at this particular portfolio that is just about to get into impairments. But they look at it and then they say, okay, Mr. Customer, when are you going to pay? The customer pays, and then we protect. Basically, it exists to protect, to guard against relegations into the impairments. Richard, earlier in the presentation, she shared with us that now we are collecting on average 25 million a month, which is fantastic because in the past, we never used to have that. So that helps because then it means then we're able to collect our money from customers and keep this line where it is it's gone down year on year.
Our guest has mentioned the importance of innovations in giving them the competitive edge. What then can the consumer expect in the way of enhancements or even new innovations from the bank in the near future?
Look forward to us rolling out new point-of-sale machines. Look forward to more Rand ATMs where it is applicable. Richard earlier on spoke about just how now you can do what you call pay to sell within cell phone banking channel. What this allows you to do is, if I know your mobile number and you bank with FNB, I can pay you just using your mobile number. I don't need your account number, as an example. So that's one of the enhancements that we are doing in the online banking channel.
We were not the only attendants of the event privy to first-hand responses from the top management at the bank. Members of the media and financial analysts in attendance raised issues certainly to be of interest to the consumer. Over the last few years, FNB has generally been performing well, and this year was no exception. The belief among some of those in attendance was that it was high time FNB was a little more generous in rewarding its shareholders. What could be the thinking behind the bank's so-called conservative approach?
Up until we know exactly what our requirements are going to be from a Basel III perspective, we are still going to continue to be conservative on dividends. So Basel III, as you know, we are doing parallel runs with the Bank of Botswana at the beginning of this year, and we'll only really know the pan out of that Basel III next year. So we'll continue to be conservative on dividends because of that.
With the Bank of Botswana having announced a freeze on bank fees, there were questions as to what would be the impact on the bank's performance.
We mentioned that what the Bank of Botswana is going to allow us to do is that for new products, we are still allowed to go back to them to determine a price, a fair price to the consumer. So that says to us that we must continue to innovate. So innovation is extremely important for us going forward, to come up with new products that can pep up our non-interest income line. It's not only dependent on fees, as I said, it's quite diversified across several products and several segments.
There is a lot to learn from the bank's approach to challenging times, most especially from their attitude, their planning, and of course their focus on innovation. We will be sure to be around to see if they continue on this unimpeded upward trajectory as the year continues. We thank you for tuning in once again. From me, Namitso Sibina, the team behind First Issues, and of course our valued sponsors, First National Bank, we wish you a good night and pleasant viewing.